Anyhow, very, very important to understand that there are lots of different types of financial services professionals, and they all get paid differently. And as a result of them having competing products, they are not going to play well in the sandbox together. Typically, you're going to be doing business with somebody who wants control of 100% of your assets. Have you had the opportunity to work with somebody who says, you know what, that's great that you have $1 million, but I only want to have control of half of that. Can you find some other qualified professional to help you with the other half? No. So it's very, very common that you would be working with a life insurance agent who only sells life insurance and annuities and accident insurance, and you would come to him and say, I have $1 million and I want to use it for preparing for my retirement. Can you help me? Well, it's very common for that insurance agent to say, okay, let me take a look at your entire picture, and oh, you're working with somebody else and they're managing this other money. Well, how much do you have with them? And then there would be maybe, let's just say, some territorial issues, okay? Everybody wants control of 100% of the client's money. It's very rare that I speak with people who say, no, I understand, I don't do that, I rely on my clients to work with their guy. If anything, I occasionally will see licensed insurance agents who have a partnership type arrangement with a registered representative that sells securities, so that when a security product is the more appropriate purchase for the client, they can refer the client over to that individual where that is their expertise. And when that individual has cases where insurance products are most appropriate, then they would refer their clients back over to that other individual. It's very hard to find those arrangements, which is ridiculous if you ask me. That's the way it should work. That's not the way it is. Okay, we have a lot of issues with people saying, well, you know what, your broker, you know, he doesn't understand these products, he doesn't sell these products, he hates these products, you shouldn't trust him. Or, oh, your life insurance agent, he sells this product, well, those products are bad and I wouldn't be dealing with him, you know. And they'll start saying bad things about one another. It's crazy to me because as a consumer, I can't believe that there would ever be an occasion for me to listen to somebody who's supposed to be a professional to bash their competitor. And then would I continue doing business with them? No. I mean, hearing you say bad things about somebody else who I may be considering doing business with doesn't make me want to do business with you anymore. So know that there is definitely a sandbox, and the people don't play well in the sandbox together, unfortunately. So really, as a consumer, I would encourage you to, if you have a situation where somebody is saying, no, I don't think you should be working with so-and-so, or it's not in your best interest to have this guy in addition to me, here's the deal. If the two guys' jobs don't overlap and you trust both of them, put your foot down and say that you're going to work with both of them. And if they can't learn to work well together or learn to work with at least you in tandem, then tell them to hit the road, okay? Because you need life insurance and annuities, and you need the stocks, bonds, or mutual funds. And if you need all those things and it's two different people that are providing them to you, then they need to deal with it. It's not your problem, it's theirs, okay? The next thing I want to talk about real briefly, and this is a very high level overview, and this was prompted from a statement that one of my friends made yesterday. They asked me if the insurance company that they were considering doing business with was real reputable, such as XYZ Insurance Company. Now, I'm not going to name that company, but I will say that company is a company that advertises on television a lot and has offices all across the country. And that made me realize we needed to address distribution a little bit, okay? And the distribution discussion is really no different if you're talking about selling vehicles or produce or insurance. There are lots of different ways to sell things. One way would be direct to the consumer over the internet, for example. Can you buy life insurance that way? You bet. The most simplistic life insurance products can be sold that way. There aren't a lot of life insurance companies that do it because that really alienates your live body insurance agents when you go around them direct to the consumer. Is the insurance better if you bypass the insurance agent and go direct to the company? No, it's not better. It's usually different. A lot of people think that if you're not paying a commission to a licensed salesperson, that means that there's more consumer value. Well, that's not always true. It could also be more profitable to the insurance company. So buyer beware. Another type of distribution outside of selling direct to the consumer would be a career or captive agent distribution when it comes to life insurance. And I call this a captive distribution because career agent distribution in general is when you have a licensed insurance agent who is technically an employee of the life insurance company. She is probably getting life insurance, health insurance, dental insurance, other benefits through the life insurance company that she's selling for. She is probably salaried for at least a couple of years, or maybe for a small percentage of her pay where she may be making commission amount above that. In general, the career insurance agent is going to be somebody who can only sell that company's products with very few exceptions. Okay? Now there are pros and cons to being a career insurance agent. I also have an article on that. You can find that out on my blog. And I'll have to repost, or I'll put a couple links out there so you guys can find them because they are older articles. But I'll just say in short, when you are a career insurance agent, you can only sell the products that that company that you're employed by sells with very few exceptions. If you can justify that what's suitable for your prospect is something that that insurance company doesn't offer, sometimes you can get an exception made. Usually you can't. And so I will give an example. I used to be employed by an insurance company that distributed through career agent distribution, and I developed annuities for that company. And if I had $1 for every time the product people at that company said, our agents will sell what we give them because they have to, I'd be loaded right now. They don't have the most competitive products because their insurance agents don't have another choice. They can only sell their products. A good thing about being a career insurance agent is that typically that product that you sell today is going to look exactly the same 10 years later, just because there aren't a lot of choices for the client or for you as an agent. That product is going to be priced so that when it's in force and it is active 10 years from the date the policy was sold, it looks just the same as when it was sold. And that's because it doesn't have to be the most competitive product. You can afford to make sure that the pricing is consistent every single year when you're dealing with a career agent distribution. So the next distribution that I would cover, and I do want to mention, there are like eons and eons of possibilities for distribution of life insurance and annuities. I'm just covering 3 of the primary distributions that I get questions about. So far we've discussed direct-to-consumer from the insurance company over the web, career agent distribution, and now lastly I want to cover independent agent distribution. Independent agent distribution is something that is just emerging in the life insurance industry over the past decade or so. I will say it's very prevalent with fixed and indexed annuities. This would be a situation where the licensed insurance agent is not an employee of the insurance company. They're actually an independent contractor. So they can sell insurance for whomever they'd like and as many insurance companies as they'd like to. Typically, they don't work directly with the insurance company. They become appointed with a third-party marketing organization or a third-party intermediary that does things that a home office insurance company would typically do for those career insurance agents. So the marketing company might provide licensing, contracting, marketing support, continuing education, sales support, case design, things of that nature. Where in the career agency distribution, those would be things that the home office insurance company does for the agent. So in an independent agent distribution arrangement, the insurance agent might not deal with the insurance company themselves very often. They're primarily going to be working with that marketing company. The typical independent insurance agent today is licensed to sell life insurance and annuities with 26 different companies and may have 6 different marketing companies that they're appointed with. The explanation of what's the marketing company and how do they interact with the agent, that's a very deep discussion for another episode. But I will say to you that in short, being an independent insurance agent definitely has its pluses because you can sell whomever's product you want. So whichever company has the most competitive product for your client, or the best cash accumulation, the lowest premiums, the best rates, you can sell for that product if you'd like, or for that company if you'd like to, because you're independent. The thing that's not so good about being an independent insurance agent is you often don't have the benefits, the support that come along with being a career insurance agent. You have no salary. So you have to basically go it alone until you start earning a commission. The level of training and just acclimation with the industry that career agents receive as compared to independent insurance agents is unmatched, I will say. And the other thing about being an independent insurance agent that a lot of independent insurance agents don't know is sometimes insurance companies that distribute through an independent agent distribution, they develop products that have what I call shiny bright objects. And shiny bright objects are basically these bells and whistles that'll get that agent's attention so that they'll sell their product instead of the next insurance company's. But shiny bright objects have to be made up for somewhere else. So one example of a shiny bright object might be our fixed annuity offers the highest interest rate for your client that any company does. But we're not going to tell you that once the first policy anniversary comes around, we're going to drop that interest rate and reduce it. That's something that an independent insurance agent might not even know to ask about. And a career insurance agent certainly wouldn't, because they've never run into that situation. It's very rare that once a career agent sells an annuity that interest rate would ever change. But in order to get a product to be the most competitive, sometimes independent insurance companies have to come up with these shiny bright objects to get an agent's attention. I would say that doesn't make it bad. And in fact, if I had my druthers, I'd be an independent insurance agent today. But it does mean that you have to do your due diligence on which companies you are representing or selling life insurance and annuities for.